Hey everyone, welcome back to your weekly market outlook. This is for the 26th of August 2024, the final week for the month of August, and basically the wrap for the third quarter. All right, let's take a look at last week. I think the main focus for last week was definitely the FOMC meeting minutes, as well as the Jackson Hole Symposium. And the FOMC meeting minutes, as per expected, it was a little bit of a dovish comment. And then we have that confirmation from the Jackson Hole Symposium in terms of what Powell has commented. Here are a few. So number one, the cooling in labor market conditions is unmistakable, and it seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions, and this is the best part. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risk. So this here is the confirmation that the FOMC is going to pivot. And obviously the next comment is definitely the stronger one as well. We will do everything we can to support a strong labor market as we make further progress towards price stability. So the pivot here is obviously away from inflation right now. Inflation is pretty much under control according to the FOMC, and the focus here right now is to not let the labor market implode on its own. So unemployment rate is basically the main focus right now for the FOMC, and they basically want to loosen up the monetary policy, loosen up the QT, and to bring life back into the labor market. So this is going to be the new mandate going forward from the FOMC. This is basically the main focus, and with that, obviously traders are delighted that we are finally clear. We have that confirmation from the FOMC. Obviously, in terms of the September rate cut, it will definitely be a live rate cut there in September. Question is it going to be the 25 basis points cut? Is it going to be a 50 basis points cut? And obviously the part here where they will depend on the incoming data is going to basically tell us that we will cut interest rates according to this data. Therefore, right now, in terms of whether or not there's going to be subsequent rate cuts in the next few months, that has to be seen in terms of the data. If the labor data continues to worsen, obviously that they're going to speed things up. And again, this week, obviously the main focus for a lot of traders is basically the PCE numbers. And if the PCE numbers fall down as per expected, then we might see the FOMC has a little bit more room to play around with the rate cut. They might go with a 50 basis points rate cut should we have a lower PCE numbers. And not just the PCE numbers that we're going to be looking at this week. This week is pretty much jam-packed in terms of all the other countries' economic data as well. On Wednesday we have the Australian inflation number, and on Friday, we will have the flash estimate for the inflation number for the Eurozone as well. And then we have the GDP numbers coming out for the US. That's going to be on Thursday, as well as the weekly unemployment claims. The weekly unemployment claims this week is definitely going to be the main focus again, as per the new mandate from the FOMC. The labor market is basically going to be the main focus. So they're trying to save the labor market from collapsing, and that's basically going to be the main focus for a lot of traders this week, to pay closer attention to the weekly unemployment claims, which is going to be released on Thursday. Again, PCE numbers on Friday, whether or not the September rate cut is going to be a 25 or a 50 basis points. A lot of traders are going to look at these PCE indicators here and try to make an educated guess in terms of what that cut is going to be in September. Is it going to be 25 or is it going to be 50 basis points? All right, let's jump into the technicals. Obviously, with how dovish the FOMC is, the US dollar continues to weaken. But from a technical perspective, there are a couple of things to pay closer attention to. Take a look at the Aussie USD first. We're now back around 68 cents. Obviously, this is going to be the hurdle that the Aussie USD needs to break. We already talked about how that range is going to be last week for the Aussie USD, which is between 67 to 68. Now we need to see whether or not it has enough momentum to break out of that 68 range there. If we do break 68, then obviously the next stop is going to be the R2 weekly. That's going to fall in line with the 69 cents, very close to 127.2%. One of the concerns that I have here for the US dollar strength is this. The US dollar has weakened significantly. We might actually see a little bit of a technical correction happening for the US dollar here. Therefore, if everything lines up correctly, my suspicion here for this week is that we might actually see a little bit of a stronger US dollar. We might see a little bit of a correction happening on all the other major currencies, including the Aussie USD, obviously, and 68 cents is where we are right now. If we fail at 68 cents, we might retrace a little bit lower towards 67 and potentially even 66.50 on the Aussie USD before we can go any higher on the Aussie USD. So the trend here is pretty clear. We have transitioned into an uptrend, but we might need a little bit more room of a correction happening in the near future. Likewise with the Euro USD, you can see where the Euro USD is currently being capped at. And our concern was definitely 1.12. That was the max in terms of how far it can run last week. And that's basically the main concern that we have here. Any failures around 1.12 here, we might see that correction happening. Do note though, we are very close to the June 2023 high. And that's basically an order block that happened around 1.1250 to 1.1275. This is going to be the main area of resistance. Should it break above 1.12, this is still likely going to cap further progress on the Euro USD. Again, the trend to the upside is very clear on the Euro USD. We just need a little bit of a technical correction to happen. So ideally, we do want to see a little bit of a pullback, at least back to the weekly pivot. That's going to be about 1.1150 at this point in time. For as long as it maintains a position above 1.11, we're not too concerned on a deeper correction on the Euro USD. So yeah, again, we'll see what happens here, but it is very close to 1.12, and this is where I suspect we might see that rejection happen. We might see a little bit of a technical correction happening across all the major currencies. The pound USD is a little bit unique though. The pound USD has broken through that June 2023 high on the pound USD. This one here has also gone beyond 127.2%. It has gone beyond 1.3150. Therefore, the next step for the pound USD is still going to be at 1.33, and this is basically the next key level on the sterling here. Again, looking at the sterling here, a strong momentum to the upside, but it is looking a little bit overbought at this point in time. We don't have that confirmation as of yet, but it is looking extremely overbought. And this is the same with the Aussie USD, the Euro USD, and now with the pound USD. So any retracement is a welcome relief for the market, because those traders that might have missed out the run on the pound USD will be able to re-enter the market. And again, in terms of what kind of pullback we are anticipating, ideally we do want to see that pullback limited to the pivot, which is at about 1.3125. So, you know, as long as it doesn't break below 1.31, we shouldn't expect a deeper correction. But if it does drop down below 1.31, then it is going to be a much deeper correction that's going to take us back to 1.3. So ideally, we don't want to see that happen. We want to see that bounce happening at 1.31, 1.3150. That's a much more ideal place for a correction here, because do keep in mind here, the run to 1.33 is not completed here. So again, we might see that short retracement, and then the market will have enough momentum to go for that 1.33. All right, lastly, we have the dollar Japanese yen, and dollar Japanese yen here, the daily has broken below 145. And this is a significant breakthrough in the dollar Japanese yen. Last week, the dollar yen attempted to push lower below 145, but it just doesn't have enough driver to break below 145. Now we have that confirmation from the FOMC in terms of how dovish it is going to be. And last Friday, we also have comments coming out from the Bank of Japan that yes, they're looking forward towards normalization. In terms of whether or not they will continue to hike rate depends on the impact of that stronger yen right now. They are still not quite sure in terms of whether or not the dollar yen strength is going to have merit or demerits to the economy. So right now, at this point in time, from a technical perspective, we have broken below 145, and the next step for this one here is that this is likely going to be driven even lower. We are currently projecting a move lower towards 142, 141. However, what's ideal here is that we want to see a little bit of a retest of that 145, just to make sure that yes, market has broken 145 and we have that retest. We at this point in time, That's basically what we're anticipating for this week. Obviously, take a look at where the weekly pivot is currently located. It's located at 145.50. That's between the range of 145, 146 support cluster. So that's where we want to see that retest happen. At least we want to see market touching 145 before we will have much more confidence in terms of, all right, this is time to short the dollar, Japanese yen. So again, that's the outlook for this week. We're anticipating a little bit of a technical correction happening, which is what a healthy market needs to look at right now. Otherwise, it's going to be an overextended, overexhausted market. It's either overbought, oversold, right? So we need that little bit of correction just to give us a little bit of a security. Those that has the big run, let them take their profits, and we want to see that profit taking turn into a short-term correction to test several key support and resistance. And for the dollar Japanese yen, that resistance is going to be 145 to 145.50. We want to see this level retested before going in for a short again on the dollar Japanese yen. So that's pretty much it for this month. With that, good luck with trades, and I'll see you soon.